Hello, I'm Working Dad Trader and welcome to the show. So, with everything going on this year in the stock market, with the stock market being down, the massive inflation increases, the war that's going on around the world and everything else that's really pushing the stock market down, is there value out there? Can we still find it? So in this episode we're going to look at, can we find value investing in today's market? Okay. Okay, so let's go back to basics and actually think about what is value investing, and let's break this down. Okay, so value investing is an investment strategy that involves picking stocks that appear to be trending for less than their intrinsic value. So with that in mind, we have to look at stocks that are, maybe the market's got them wrong. So value investors use financial analysis. They don't follow the herds and are long-term investors of quality companies. So these are the companies that we look for when the stock market has got it wrong, basically. And we look for where short-term hype or short-term craziness has got into the market and so the prices are pushed down, and then we look for value once this is happening. An example being is the COVID crisis back, when lots and lots of companies, the stock market dropped about 40%, and there was lots of great companies out there, and suddenly all the stocks and in the stock market in the SP 500 all dropped 40%. Now you can't tell me lots of these great companies out there were 40% less in value with just one event. But what happened? We all panicked, everyone sold their stock, they couldn't see what was going to happen, and then all the stock market sold in fear. This is a perfect example then of a stock that was good one day was now 40% cheaper than it was the next day. And what happened within a few months, we got the vaccines, we could see that there was a way out of this, and they jumped up, and now a lot of these stocks of good companies are a lot higher than they were back when that first happened. So let's start off by looking at companies that are not value investing, no matter what people try and tell me. I don't believe, in my opinion, these are stocks that are value investing. A lot of these stocks have been speculative stocks, hype stocks, stocks that are going to be great, stocks that are going to be amazing in the future, and they're just pushed up by the hype. And these stocks, really, what can you judge the value on? Because at the end of the day, you're looking for what is the value of that stock. Well, like with anything in life, what is the value of that thing that you're looking at? So we start off with Teladoc, which I can remember a couple of years ago, it was pushed out. This is an amazing company. It's going to go to the moon, etc. Blah, blah, blah. All these normal things that happen with these speculative stocks. But when you actually break down, what is the actual value of Teladoc as a stock? Let's have a look. Is that a company that's, making money? And we look at the financials. Yes, its sales have been growing over the last 2-3 years, but it's then we look at the net, what it actually makes after all the expenses and all the deductions, it's actually losing money. So this isn't really value for investing, because you're looking for good companies that are going to carry on doing well and making money into the future. Another one would be NIO, meant to be an amazing stock. It's going to be the next Tesla. It's in the EV space, and again, this stock is going to go fantastic. But when you look at the financials again, you look at the actual stocks, and this is what we do when we're looking for value. You're looking at it and you're thinking, well, yes, okay, it's growing its sales, but again, it's not making any money. It's in minus for net profit. Another one, which back when the COVID first hit, was Peloton. It exploded. The stock shot up. It had loads of people buying it. People were exercising at home. This is going to be a new way everyone exercised. When you actually break it down and you look again at the financials, this is after it. Yes, the sales grew because it sold lots of their equipment and stuff and sold lots of their sales. But again, after all that boom when we were all stuck at home, it's not made any money. So for me, this is not value investing. This is just speculative stock, and they're not good companies to invest your hard money into. Some people might argue with me on these ones and say, yeah, but you're paying for potential in the future. But I would sooner pay for what it's actually worth now, because you're already overpaying for a stock that could be worth this in 3-4 years' time. Well, to me, that's not value, because you're already paying, those prices are already built in. So that I would say no, you could trade them, but not as a long-term value investment. Okay, when we're going to have a quick look at name possible stocks that could be of good value, and again, this is just my opinion. By all means, in the descriptions below, add your own comments and put in what stocks you think would be great value for investing, for long-term investing, and are great value. I've just picked out a few. I mean, in this example, I've picked Meta, which is Facebook. I mean, look how low that stock has got. And what's really happened, really, there's just been a lot of bad news. There's been an overreaction with stuff going on. But let's look at the financials. Let's just clear the noise away and think long term. With value investing, you're looking at the long term picture, not what's happened today or yesterday or what's going to happen in a couple of months. You're looking years, 2 years in advance and think, where's my money going? And how much is this company worth? It's trading at $184 at the moment. The stock's plummeted. And then you look at the financials. The financials are fantastic. The company is making, year after year, it's making money. It's growing sales. Its net profit is really healthy. It's been growing. Yes, it's missed a few quarters from where it's expected to do. It's been putting a lot of money into its whole metaverse thing, which is going to be another sideline on top of what Meta does with Facebook and Instagram and stuff like that. This company is making loads and loads of money. It's a cash machine. You look at the balance sheet. The balance sheet is fantastically strong. They've got so much assets, so much cash flow, so much cash in hand. It's really, really strong company. So you look at the prices. Let's try and look at what it could be worth and what we think roughly it could be worth. And we go on to look at possible a target of where this stock should be. It's at 184 now, and on an average, this is out of many analysts that they're saying that the stock should be around $318, and it's trading at 184 for a company with really strong sales, really good balance sheets. Now that to me is value investing. Another stock we'll move on to is Amazon. Amazon, again, I'm picking well-known companies so that everyone knows them. They can look at the value. Look at Amazon on the it's plummeted lately, and it's done trading at $2,887. Again, you go back to the financials. You look at the financials. Look at the sales growth year after year, growing sales. You look at the net sales growing year after year. You look at the balance sheet, fantastically strong balance sheet. You're telling me that these companies like Amazon are not going to keep on growing? There's not a lot of competition for these companies like Amazon. There's not a lot of competition that they're up against. So we would, again, when we're looking for good companies, we're looking to see if they are the main competitor in their area or there's very little competition. So we call that a moat, and that they're not going to be challenged. And these companies have got, most of the market, and this is what we look for in the signs of really good companies. And we look at what this stock should maybe be worth and an intrinsic value in the future. It's trading at 2,887 at the moment because of obviously the downturn, and it's averaging at over $4,000 as a price target of where it should be. I mean, that is so cheap. Other companies that you could throw in there, I mean, I won't go into all of them, but I could throw in like Adobe, another company that's way down low in the stock market and I believe is undervalued. Possibly in the UK market, you could add a company like B&M if you want to go and look at that out. Strong sales, strong net sales. It has got a slightly growing debt, which is a worry, but the balance sheet is still pretty strong. But it's, again, I believe, slightly undervalued. So when we're looking for value stocks in today's market, there is still stuff out there, and all this downturn is creating opportunities for people who are looking for value investing. Okay, so remember the Warren Buffett quote: price is what you pay, but value is what you get. Okay, so I hope you really got something from this show today and enjoyed the content. Remember to help support this channel by hitting the like button, and if you haven't subscribed already, then make sure you subscribe, and I shall see you all soon. Take care.